Folks, the TSX's newest gold producer has released their first set of financial results after commencing production. And quite frankly, the early results bode well for the future of the company. G Mining Ventures, who declared commercial production at their Tocantinzinho mine in early September, is today's focus as we examine their performance for the first quarter of mining operations. Folks, we're talking Q3 earnings, we're talking G Mining Ventures. Let's dive in. All right, let's start off with the high level. G Mining in the third quarter posted revenues of $43 million, with the third quarter being the first time that the company ever recorded revenue, after having completed their first gold pour on July 9th at the new Tocantinzinho mine. The revenue was off the back of sales of 17,000 gold ounces after having produced 22,000 ounces in the third quarter. The gold was sold at an average realized price of just over $2,500 an ounce. All-in sustaining cost, meanwhile, came in at $1,226 an ounce, leading to cost of goods sold of $18.4 million and margins of $27.9 million. Net income for the quarter amounted to $24.3 million or 12 cents per share, while adjusted net income came in at $17.1 million or 9 cents per share. Adjusted EBITDA amounted to $25.5 million for the third quarter. Operating cash flows came in at $1.7 million versus free cash flow of negative $6.2 million. G Mining ended the third quarter with cash and cash equivalents of $105 million versus $13 million as of the end of the second quarter, thanks in part to a $50 million financing conducted during the quarter with Franco-Nevada and La Mancha Investments. The remaining gap was largely attributed to the exercise of warrants and options, the gross proceeds of which have totaled $56 million year to date. Okay, let's get into the Tocantinzinho mine. The third quarter was a milestone quarter for G Mining, with Tocantinzinho achieving both a first gold pour as well as commercial production. The mine saw over 700,000 tons of ore processed at an average grade of 1.2 grams per ton, while recoveries stood at 84.5%. For reference, a feasibility study completed on the project in 2022 called for average grades of 1.31 grams per ton gold over a 10.5-year mine life with recoveries of 90.1%. With that being said, it's hard to be critical of average grades or recovery rates during the quarter. Q3 saw 2 months of commissioning followed by a single month of commercial production. Recovery rates of 90% are targeted for the fourth quarter, which is in line with the feasibility study. The project also remains in ramp-up, with a target of achieving nameplate capacity of 13,000 tons per day in Q4 at the plant. Current guidance, meanwhile, calls for Q4 production between 30 and 40,000 ounces of gold. Expansion is also on the mind of G Mining, with the third primary loading unit and 3 mine trucks set to be added in the second half of 2025, bringing the mining rate to 77,000 tons per day. Full guidance for 2025 is expected to be released in January. Outside of their current mining operations, G Mining is working hard towards becoming a mid-tier producer. The third quarter, in addition to commercial production being achieved, saw the $875 million acquisition of Reunion Gold completed, resulting in G Mining taking ownership of the Oko West project in Guyana. Subsequent to the acquisition, the company released a PEA outlining an after-tax NPV of $1.4 billion for the project at $1,950 gold, which grossed to $2.5 billion at $2,500 gold. The estimate outlines an operation with a 13-year mine life producing an average of 353,000 ounces per year at an AISC of $986 an ounce. A feasibility study is expected to be released on the project in the first quarter of 2025, with a definition drill program in support of the study already having been completed in Q3. And if that isn't enough development crammed into a single quarter, in September the company announced they would be acquiring the Centro Gold project from BHP. The Brazil-based project contains a resource of 2.3 million ounces of indicated and inferred gold and was acquired simply for a 1% NSR on the first million ounces of gold produced and a 1.5% royalty on the gold produced thereafter. I guess when you're known for getting things done in the mining world, people are willing to settle for a low upfront payday in exchange for long-term cash flow. That transaction is expected to close in the first quarter. Okay, so let's wrap it up. Given the fact that this was the first quarter of production for G Mining, the results couldn't have been better. Really. During the quarter, they were ramping production and only achieved commercial levels for a single month of the quarter. Yet, they were able to keep costs low and post positive net income. There's plenty of miners out there that are producing at scale and have much worse costing profiles. And the benefit here is that as production continues to scale towards nameplate capacity, the cost profile on a per ounce basis should improve. Whether they get to the $681 per ounce ASIC forecasted in their feasibility study is anyone's guess, but they're sure off to a good start. The bright side here for investors is that growth isn't slowing either, despite having now begun production. G Mining is already on to the next project, with another contender in the pipeline for when Oko West is through the development process. In a rising environment, that's a major positive. All right, everybody, thanks for watching. We're almost through earnings season. I hope you enjoyed this video and this series. If there are any companies you want us to cover or any stories out there that you want us to look into, please let us know in the comment section. We appreciate all the engagement we've been getting of late. And if you haven't already, please subscribe, hit that notification bell, and also smash that like button, everyone. Thanks for watching.